What's up, stock investors? I'm Mike the Investor, helping you invest in yourself by sharing my investing journey and inspiration. If this is your first time checking out the channel, be sure to click that subscribe button and smash that like button for me. It really helps out the channel and it lets me know you all appreciate the content that I'm putting out. Now, we have been dealing with extreme volatility here in the stock market. I hope you and your family have been staying safe and healthy with everything going on in the world currently. And from an investing standpoint, I hope you have been able to take advantage of some of these great prices with some of these companies reaching undervalued prices here in the stock market. Now, since my last Robinhood portfolio update, I have made 4 new purchases here in the portfolio since this past week. So we're going to dive into that. We're going to look at my overall portfolio performance and each individual stock. And then I want to show you the power of dollar cost averaging. So I'm going to be adding my 4 new purchases to the dividend tracker so you can see what my average cost was and what it is now after I've made those brand new purchases. So let's dive right into it and check out the Robinhood portfolio. All right, investors, welcome back to the channel. Now we're looking at my Robinhood portfolio. And if you can see down here at the bottom, I have a free stock from Ashley. So thanks a lot for using the link, Ashley. Hope you got something really cool. We're going to open up the free stock that you got for me and see what I received. So we're going to click this stock here. And we are going to see, so I got Corbus Pharmaceuticals. It has been down 2.58%. So thanks again, Ashley, for using my link. Really appreciate that. Now, as we look at the portfolio performance, you can see on Friday, end of day, market hours, I was down 0.83%, which is $67.74. During after hours, I was down 0.25%. which is $20.14. As we go over to look at the 1 week, you can see I'm currently up just 0.66%, which is $52.95. We take a look at my 1 month, I am down 8.39%, which is $737.50, which that is pretty much all of my capital gains for the most part. We look at my 3 month and you can see I am down 5.97%, which is $511.16. We move over to my 1 year here. You can see I am down just 0.54%, which is $44.07. And then as you can see here on the all time, it's going to be the exact same. And I want to go back over to my 1 year because I want to show you something. So I've been investing since April 23rd of 2019. So you can see that's April 23rd. As I move over one, there's money starting to move in the market when I started to invest. So I'm gonna leave it right here for a second. So if you are a newer investor or newer than I am, I just kind of want to prepare you or make you aware that this is a roller coaster that you can expect, you know, with your assets and the stocks and the companies that you are invested in. Now, currently we are in a current correction and a market downturn, but as you can see, as the portfolio value rises here in the portfolio, you can see we have dips, pullbacks, dips, and then it rises. Then we have another pullback, and then you can see it rises again. And then you can see this is where it peaked at the most. My portfolio almost reached about 9 grand. And then you can see we started to have a slowdown here in the market. So you can see it had a significant pullback. And then you can see it went back up a little bit. And then right there after February 20th, I believe that was the weekend. Once it came back on that Monday, stocks fell significantly. And you can see we have pretty much been in a correction the last few days. So I just kind of want to prepare you for it. This is what you can expect, you know, when investing in the stock market, because it's really easy to show you my portfolio when I'm all green and everything is doing great. But how does it look on the other side when everything is red? Now, me personally, I feel 100% safe with every single stock that I hold in my portfolio. And that is why if you were following me from the beginning or even halfway through my investing journey, you will start to notice that I slowly started to make changes to my portfolio and add stronger blue chip companies to the portfolio for more stability and more peace of mind for me as an investor. So now we're going to go and look at my history for the week to look at my 4 purchases, and then we're going to dive into each individual stock. I'm going to hit the account here. I'm going to go down to my history, and you can see I already have quite a few dividends already pending for the month of March here. We're going to hit my orders here, and now we're going to be able to see all of my history, my buys and my sells. So if you've been looking at the last Robinhood portfolio updates, you know before these purchases, I bought another share of Disney, and I actually bought a share of Procter & Gamble in Disney February 28th. I received a free stock, and I sold out of Plug Power, which I showed in my last video. When I received that free stock, I ended up buying 10 shares of Apple Hospitality REIT on March 3rd, 10 shares at the cost of $12.75. And the second purchase I made on that same day, I purchased another share of Disney for $116.66. Now on Friday, when the markets actually went down a little bit more, I purchased 1 share of Microsoft at $159.95, which I think is a really nice buy, and I'm gonna keep buying into Microsoft as well. And then as we look at Apple Hospitality REIT, you can see I purchased another 10 shares at $12.90. So now we're going to go over and take a look at the portfolio. And as we look at those individual stocks that I bought those positions in, we will add those into the dividend tracker and look at the current average cost and what it was before I made those purchases. So for my buying power, I have $16.43 that I can spend on stocks. Now I'm going to be just waiting for my dividends and my next deposit until I use my current buying power. Now this is going to be my biggest month in dividends so far for the month of 2020. I have already added up my current payments, and it is pretty significant amount, so I'm really excited about it. So be sure to stay tuned to the end of the month when I break down my dividend payments for March 2020. The first stock we're going to be taking a look at is Procter & Gamble. This is a dividend king. They have 63 years of dividend growth, so I kind of have my portfolio organized based off of how many dividend years each company has. So you can see they were up 0.02% during regular hours. Moving down here to the position, this is a consumer defensive play. They are in the consumer staples sector, and you probably use a ton of, Procter & Gamble products. Looking at my average cost, I have $110.29 on my 3 shares. My total equity, $361.74. Total return, I'm currently up 9.33%, which is $30.88. Now I'm waiting for another pullback here in Procter & Gamble because I really want to add a lot more into this position. This is going to be one of my top 5 major positions that I have a lot of money allocated towards. The next position will be 3M. This is a dividend king with 57 years of dividend growth. This company is extremely undervalued in my opinion. They have been hit hard with going all the way back to the trade wars to what's happening now here in the current market, and just with the overall stock, changing, how they do business and getting into different industries to help stabilize their current business plan. So moving on down to my average cost, you can see it is $159.62 on 4 shares. We move over to my equity, which is $610.40. I'm currently down 4.40%, which is $28.08. Now this is 7.58% of my portfolio diversity, so this is one of the larger positions here in the portfolio. The next position will be Johnson & Johnson. This is a dividend king as well, and they have 57 years of dividend growth under their belt, and I'm waiting for them to dip more as well. This is going to be one of my larger top 5 positions that I'm going to have a lot of my money allocated towards. And you can see they were up just 0.01% during market hours on Friday. We move down to my current position. I have 4 shares. My average cost $139.71. We move over to my equity, $565.96. I am up 1.28%, which is $7.14. And you can see Johnson & Johnson is 7% of my portfolio. The next position will be Coca-Cola. This is a dividend king as well. They need no introduction. Very, very solid company. They have 52 years of dividend growth under their belt. They were down 2.61% during market hours on Friday. We move down here to the position. My average cost $52.15 on 6 shares. We look at my equity, $330.12. I am still currently up on this position at 5.51%, which is $17.23. And Coca-Cola is only 4.10% of my portfolio, which I am looking to raise this portfolio allocation as well. The last dividend king in the portfolio, ticker symbol MO, also known as Altria. This stock has been beat up as well with the vaping industry, with their current investment in Juul Labs, and just how the analysts have been hitting the stock pretty hard as well. They have been down 2.34%. We move on down to my average cost, which is $47.63 on 10 shares. Looking at my equity, $421. I am down 11.60%, which is $55.27. And Altria is 5.23% of the portfolio. The next position will be ADM. Now this is a dividend aristocrat. Now Dividend Aristocrat is a company who has grown their dividend for 25 years and counting. That is in the S&P 500. Now you can see they are down 1.80% during market hours of Friday. This is also a consumer staple company here. They deal with, agricultural products like corn, seeds, and things like that, that farmers use to plant crops. As we move down here to the position, my average cost $39.02 on 4 shares. My equity is just $150.56. I'm currently down 3.53%, which is $5.51, and my portfolio diversity is just 1.87%. Now I believe ADM, Archer Daniels and Midland, is extremely undervalued. They're currently sitting at $37.64. This is a super stable consumer defensive dividend aristocrat company here. They are sitting at, I believe, 26 years of dividend growth. And I do want to add a lot more into this position, but I've been adding into other positions that I've been wanting to build the value up, before the market starts to rally back up, whenever that may be. The next position here in the portfolio will be AT&T, ticker symbol T. Now they need no introduction either. They were down 0.40% during market hours on Friday. They are currently at $36.91. We look at my average cost, $31.25 on 5 shares. My equity is just $184.55. I'm still currently up on this position at 18.10%, which is $28.28. And AT&T is only 2.29% of my portfolio. Now I am waiting to see another significant pullback from AT&T. As you can see, my average cost is $31.25. Now me personally, I do believe that AT&T is worth the current price that it is sitting at, but with my average cost, I'm kind of being stingy and hoping for it to get closer or even lower than my average cost, so that way I can buy even more of this company at a better value price. The next position will be Microsoft, and this will bring us to the first buy here in the portfolio. I now have a total of 5 shares of Microsoft, and you can see they were down 2.83% during market hours. They are currently sitting at $160.40, which I think is a extreme value buy for Microsoft. We move down to my position. My average cost $171.87 on 5 shares. We move over to my equity, $802. I'm currently down 6.67%, which is $57.35. And for my portfolio diversity, Microsoft is about 10% of the portfolio alone. So this is my largest position here in my portfolio, and I'm completely okay with that. Microsoft will be one of my 3 largest positions that I hold in the portfolio. So looking at the average cost, you can see it is currently $171.87 on 5 shares. So now we're going to go ahead and add this new position into the dividend tracker. So we're going to go over to the dividend tracker here. We're going to type in the ticker symbol for Microsoft. Now you can see currently, before I made that purchase, I had 4 shares. My average cost was $178.85. So now if we go back over to the Robinhood portfolio, you can see how much it has dropped. 5 shares, $171.87. So that is the power of dollar cost averaging when you can buy really great value companies at a lower price that you bought in at. So we're going to move back over to the dividend tracker here, and we're going to go into the edit, and I have a total of 5 shares now, and we're going to put in my new average cost, which is 171.87. And we're going to hit the edit button here. And now you can see the average cost has dropped about $8. Yield on cost 1.13%. Current dividend yield 1.23%. And my annual income from Microsoft $9.70, which is not bad. And Microsoft has been growing their dividend for 16 years and counting. So a solid dividend growth company. And as you can see, my current dividend yield 3.6%, yield on cost 3.51%, and my annual income $277. Now I want you to watch my annual income and my dividend yield for my entire portfolio, because as we add into my other positions, you're really going to see the annual income shoot up in price, and you're also going to see the dividend yield change as well based off of what companies I'm adding to the portfolio. We're going to move back over to the portfolio and take a look at the next stock. The next position here in the portfolio will be Starbucks. Now, me personally, I thought this company was actually going to be, hit a little bit harder here in the market, but it just kind of goes to show, the stability of a strong blue chip company. Now they are currently sitting at $75 even, which I think is a complete steal for this company. They were currently down 1.12% Friday during market hours. Looking at my position, my average cost is $87.05 on 10 shares. Looking at my equity, $750, and I'm currently down 13.84%, which is $120.45. Now Starbucks is about the second to third largest position here in the portfolio, sitting at 9.31% portfolio diversity. Hey investors, if you haven't had a chance to smash that like button, go ahead and smash the like button for me. It really helps out the channel, and I also have some pretty cool links down in the description, such as the free dividend tracker that we're taking a look at in this video. Let's dive back into the portfolio. As we move down to the next position in the portfolio, Disney. Now Starbucks and Disney, they have both been growing their dividend for 10 years. These companies do not need any introduction. Super solid dividend growth companies here. We're going to go into my position here on Disney, which would take us to the next buy here in the portfolio. They were up 1.13% during market hours on Friday. Now this is still an extreme buy for Disney. This is a solid company, an even stronger company than what it was even a year ago or 5 years ago, and it's trading at $114. So super solid company. As we look at the position here, you can see my average cost $126.52 on 4 shares. My equity $458.50. I'm currently down 9.42%, which is $47.69. Now Disney is 5.69% of the portfolio. Now we're going to go ahead and add in the new buy into the tracker, and you're going to see where my current average cost was and where it is now. So currently it is $126.52. So we're going to move over to the dividend tracker, and we're going to delete this ticker symbol and type in Disney. Now you can see before we add in my average cost I currently have, those 3 shares that I had before I made that purchase was $129.81. Annual income $5.28. So now we're going to hit the edit button here. We're going to hit my 4 shares, and we're going to change my cost. $126.52 is my new average cost. We're going to hit the edit button. Looking at the new Disney position, 4 shares, it has the average cost. My annual income went up, now it's $7.04, and now you can see my annual income as well for the overall portfolio, $279. My dividend yield actually went down 0.03%. It was 3.6%. So now let's go back over to the portfolio. I'm going to keep buying into Disney, definitely with Disney at this price. So undervalued in my opinion, and I want to be able to lower my average cost as much as I can while we have this opportunity. The next position here in the portfolio, PetMed Express, ticker symbol PETS. They were down 2.61% Friday during market hours. Moving down here to my position, my average cost $15.82 on 10 shares. My equity $265. I'm still up on this position at 67.56%, which is $106.85. The next position in the portfolio will be Pfizer. Now technically Starbucks, Disney, PetMed Express, and Pfizer have all been growing their dividend for 10 years and counting. So some very strong companies here in the portfolio that has room to keep growing their dividend each year. So we're going to go into my Pfizer position here, and they have been beat up a little bit, but this is one of the largest medical companies in the world, and I still think they are extremely underpriced and undervalued. During market hours, they were down 1.24%. We moved down to my position. Average cost $39.05 on 10 shares. My equity $349.20. I am down on this position at 10.57%, which is $41.27, and Pfizer is 4.33% of the portfolio. The next position will be the AES Corporation. Now this is a utility company. They have been growing their dividend for 7 years and counting. They were up 0.54% during market hours on Friday. Moving down here to the position, average cost $16.05 on 10 shares. My equity $168.20. I am up 4.80% on this position, which is $7.70, and this is just 2% of the portfolio. The next position will be Bank of America. This is the second largest bank in the US besides JP Morgan Chase. Now they are extremely undervalued at this price. This will probably be the next buy in my portfolio. Bank of America, they were down 4% during market hours, and then they were down another 1% during after hours. So they were down 5% on Friday, which really dropped their price a little bit even more. Looking at my average cost, $28.57 on 10 shares. My equity is $254.30. I am down 11% on this position, which is $31.43, and Bank of America is 3.16% of the portfolio. After Bank of America, we move down to my REITs. Now Bank of America has been growing their dividend for 6 years. We look at ticker symbol O, Realty Income. This has just been added to the S&P 500 Dividend Aristocrats, so you know they have been growing their dividend for over 25 years and counting. But this is also known as the monthly dividend company for constantly raising their dividend every single month. Now you can see they were down 1.26% during market hours. Now also with the Feds cutting the rates even more, REITs have been getting hit a little bit more, so it does allow us to buy into some of these better REITs at a better value price. Now my position here, my average cost is $72.14 on 10 shares. My equity $766.50, and I'm currently up still on this position at 6.25%, which is $45.08. Now Realty Income is like my second largest position. Starbucks and Realty Income go back and forth, and this is sitting at 9.51% of the portfolio. The next REIT here in the portfolio will be Stag Industrial. They have been growing their dividend for 8 years and counting. They also pay me every single month, and they were down 0.83% during market hours on Friday. We move on down to the position. My average cost $29.89 on 10 shares. Moving over to my equity, $288.30. I am down 3.53%, which is $10.55, and this is 3.58% of my portfolio. The next position in the portfolio will be Innovative Industrial Properties. Now they have been growing their dividend for 2 years. Now this is another REIT. They do not pay monthly, they pay every single quarter. Now this is a cannabis REIT that invests in, properties and facilities that, growers and things like that are going to use. So I think it is a great way to get exposure into the cannabis sector without putting all your eggs into one basket and still getting the real estate sector exposure as well. So you can see they were down 2.5% during market hours. This REIT, in my opinion, has so much upside and potential while paying a really nice dividend. You look at my average cost, it is $77.22 on 3 shares. We look at my equity, $281.25. I am up 21.41%, which is $49.59. Now this company is 3.5% of my portfolio, and I don't know if I'm going to get lucky enough for this company to get back down to my average cost, or at least close enough. But if it does, or even gets around that $80 range, I will be adding more into this REIT because I think it is a solid REIT. They have a solid balance sheet. They have about 98% capacity full. They are profitable, and they also have been growing that dividend since they started paying it, even though they are a newer company. The last REIT in the portfolio will be Apple Hospitality REIT. I have a total of 50 shares, which will bring us to the last buy here in the portfolio. They were up 2.23%. Now this is another undervalued REIT in my opinion. They're in the lodging side of the REIT industry, and this company is always over 94% capacity full. They are not losing money. They're very profitable, a solid balance sheet, and they're only paying about maybe 75%, of their earnings. So they still have room to potentially grow that dividend, in the future. So looking at my position here, average cost $14.58 on 50 shares. My total equity $642. I am down 11.93%, which is $86.98. And this is about 8% of my portfolio. So we're going to go ahead and add these 20 shares into the new dividend tracker so we can look at the new average cost. So now we're going to type in APLE for the ticker symbol. So you can see originally I had 30 shares, average cost $15.75. So I really want to show you the power of dollar cost averaging. $15.75 currently. So now you can see I have 50 shares, average cost $14.58. So it lowered my average cost a little over $1, which gives me a better value price on this company. Moving back over to the dividend tracker. Now this is really gonna upscale my annual income. So I really want you to pay attention to this. You can see it's currently $279 annually, $357 on a total dividend yield for my portfolio. So now we're going to hit the edit button here, and we're going to change my number of shares because I now have a total of 50. My cost per share $14.58. I'm going to hit the edit button, and now the new position of Apple Hospitality REIT, 50 shares. It has the average cost, dividend yield 9.55%, which is crazy right now. The yield on cost 8.23%, and you can see my annual income is $60 because they paid 10 cents per share, and I have 50 shares, so they pay me $5 every single month. And now you can see, looking at my annual income, my portfolio is producing a little over $300 in a 12-month calendar year, which is pretty incredible for me. Constantly growing my annual dividend income, because that's what it's about, is growing that passive income number so you don't have to keep exchanging your time for money. And we look at the dividend yield, 3.76%, which is not bad. I want to get my dividend yield to about a 4 to 5% when it's all said and done. Moving back over here to the portfolio. Now as we scroll down, I want to be a little transparent and show all of you how long I've been receiving dividends from this company. This was actually my first dividend that I received from a company here. So we're going to go down and hit my show more, and then we're going to click on dividends. So I'm going to scroll all the way down to the bottom. You can see I've been receiving dividends since May 15th for 10 cents, 50 cents, and then you can see it's $1 going all the way up $3, and then starting March I will be receiving $5 every single month from Apple Hospitality REIT. Now that is pretty incredible, the amount that I'm receiving from just one company alone. And if we take a quick look back at Apple Hospitality REIT, and you can see down here for my equity, I had $642 equity here in this company, and they're actually paying me $60 every year for holding my 50 shares. So that's close to a 10% return on my investment on just this one company. So that's a pretty, nice feeling. And I also know Apple Hospitality REIT is definitely, when all things said and done and the smoke clears, it is going to surpass the current price that it's at, as well as my current average cost. But my entire goal for this company is to get about 100 shares into Apple Hospitality REIT, which will start paying me $10 every month or $120 every single year to reinvest back into my portfolio. And now we're going to look at the last position here in the portfolio. This is the free stock that we got a little bit earlier. I'm going to be selling out of this stock. You have to hold it for at least 3 trading days before Robinhood will allow you to sell it. So we're going to look at the only ETF that I hold in this portfolio, SPHD. Now this is a solid ETF. PowerShares S&P 500 high dividend low volatility ETF. They were down 1.95% during market hours. Moving on down here to the position, my average cost $42.87 on 10 shares. My equity is $386. I'm currently down 9.97%, which is $42.73, and this is 4.79% of the portfolio. And SPHD have been growing their dividend for 2 years, which is pretty rare to see an ETF constantly growing their dividend year after year. So these are all 19 holdings here in my Robinhood portfolio. Let me know down in the comment section which company that I hold is your favorite, or which one that you're wanting to buy into and build up your current position. So that is how my Robinhood portfolio is performing. Be sure to let me know down in the comment section how your portfolio is performing in these current market conditions, and also be sure to smash that like button for me if you haven't had a chance yet. It really helps out the channel and it lets me know you all appreciate the content that I'm putting out. I'm Mike the Investor. Remember to stay inspired, stay motivated, invest in yourself, and I will see you guys back next time.